A single online sale can surprisingly mean owing taxes in dozens of states. This baffling reality causes unexpected tax problems for Amazon sellers every single day. It is a giant mess for many small business owners. Most sellers start with a simple idea. They want to sell a product, they dream of earning extra money, maybe even quitting their 9 to 5 job. They set up an Amazon seller account. It seems easy. Amazon handles shipping and customer service. They think they just sell and Amazon sends money. But the tax landscape is far more complex. It is like navigating a giant maze blindfolded. Consider sales tax first. This is a huge trap. Before 2018, states only collected sales tax if a business had a physical presence. That meant a store, a warehouse, or employees in that state. Then the Supreme Court made a big decision. This was the Wayfair case. It changed everything for online sellers. Now states can demand sales tax from businesses with an economic nexus. An economic nexus means you just sell enough into that state. You do not need a physical store. You do not need employees there. Each state sets its own rules. This is where it gets really complicated. 45 states plus Washington, D.C. collect sales tax. That is a lot of different rules. Many states say you have an economic nexus if you make 200 sales. Or if your sales hit a certain dollar amount, this amount can be $10,000 or $20,000. Sometimes it is $100,000. Imagine selling $205 items into a state. That is just $1,000 in sales. But it might trigger an economic nexus. You then have to register for a sales tax permit in that state. You must collect sales tax from buyers there. You must then remit that tax to the state, and you must do this on time. If you do not, penalties add up fast. They can be hundreds of dollars, even thousands of dollars for missed filings. Amazon complicates this with its FBA program. FBA means fulfillment by Amazon. Sellers send their inventory to Amazon warehouses. Amazon stores it. Amazon ships it when a sale happens. But these warehouses are all over the country. This means a seller could have physical nexus in multiple states. Even if they never step foot in those states, their inventory sitting in an Amazon warehouse creates a physical presence. This triggers sales tax obligations for many, and it triggers other taxes too. Some states have an inventory tax. This means you owe tax on the value of your goods stored there. It is a hidden cost many sellers miss. Then there is income tax. This is a different beast. Most Amazon sellers are sole proprietors, or they form a single-member LLC. For tax purposes, these are pass-through entities. The business profit is your personal income. You owe self-employment tax. This covers Social Security and Medicare. It is about 15.3% of your net earnings. Many sellers forget this. They also forget to pay estimated taxes. The IRS requires you to pay taxes throughout the year, not just at year-end. If you expect to owe $1,000 or more, you must pay estimated taxes quarterly. Missing these payments leads to underpayment penalties. These penalties can be hundreds of dollars. They add up quickly. Tracking deductions is crucial. Amazon fees are a big one. They can take up to 50% of a product's sale price. Shipping costs, advertising costs, software subscriptions, these are all business expenses. They reduce your taxable income. Keeping good records is vital. Many sellers use spreadsheets. Others use accounting software, services like QuickBooks or Zero help. But you must input everything correctly. Many new sellers do not track every tiny expense. They leave money on the table. This means they pay more income tax than they should. Consider sales tax again with marketplace facilitator laws. This is a newer development. Many states now have these laws. They shift the sales tax collection burden to the marketplace. Amazon itself collects and remits sales tax for many states. This is a huge relief for sellers, but it is not for every state. And it depends on the specific state law. Sellers still need to know where they have nexus. They still need to check if Amazon is collecting correctly for all their sales. If Amazon does not collect sales tax for a state where you have nexus, you are still responsible. It is your legal duty. You cannot just assume Amazon handles everything. That assumption can be a very expensive mistake. International sales bring another layer of complexity. Selling to Canada or Europe means dealing with VAT or GST, value-added tax, or goods and services tax. These are consumption taxes. They are added at each stage of production and distribution. Sellers need to register for these in the destination country. They need to understand import duties and customs. If you ship from the US to the UK, for example, you might need a UK VAT number. This applies even if you are a small US-based seller. The thresholds for VAT registration are often lower than US economic nexus thresholds. It is a steep learning curve, and it carries its own set of penalties. The sheer volume of transactions is another challenge. A successful Amazon seller might make thousands of sales per month. Tracking these sales by state. Applying the correct sales tax rate. Rates vary by city, county, and special district. A single state might have hundreds of different sales tax rates. Some products are taxed differently. Clothing might be exempt in one state but taxed in another. Food items have different rules too. It is not just one rate per state, it is hundreds of rates. Across 45 states, this multiplies the complexity exponentially. Many sellers try to do it all themselves. They use spreadsheets. They spend hours figuring out sales tax. This is time they could spend growing their business. It is a huge drain on resources, and mistakes are very common. One miscalculation can lead to an audit. An audit means tax officials review all your records. This is stressful, it is time-consuming, and it can result in significant back taxes, penalties, and interest. Tax software like TaxJar or Avalara exists to help. These services automate sales tax calculations. They help with filing, but they cost money, and sellers need to integrate them properly. It is another business expense, but often a necessary one. Some sellers try to ignore the problem. They hope they will not get caught. This is a risky strategy. State tax authorities share information. The IRS shares information. They are becoming very good at identifying non-compliant businesses. Amazon provides seller data to the IRS on Form 1099K. This form reports gross sales. Even if you sell only $600, Amazon reports it. This means tax agencies know about your sales. They know about your income. They can track you down. And they will. The fines and penalties can wipe out all your profits. They can even put a business out of operation. Understanding your business structure affects taxes too. An LLC offers liability protection, but it does not change how federal income tax is paid. Unless you elect to be taxed as an S corporation, an S corp can save you money on self-employment taxes. You pay yourself a reasonable salary. That salary is subject to Social Security and Medicare taxes, but any remaining profit is distributed to you as a dividend. This dividend is not subject to self-employment tax. This can save thousands of dollars a year for profitable businesses, but forming an S corp has its own rules. It needs payroll processing. It requires more complex tax filings. It is not for everyone, but it is a valid strategy for some. State income taxes for businesses are another consideration. If your business has nexus in multiple states, you might owe state income tax. In those states, this is beyond your personal state income tax. It is a business level tax. Most states have an income tax. Some have a franchise tax or gross receipts tax instead. These are all different, and they add to the compliance burden. Keeping track of all these state-specific taxes is a full-time job. It demands constant attention. Rules change year to year. New laws are passed. The tax environment is always shifting. Many sellers get overwhelmed. They feel lost. They do not know where to start. They make mistakes. These mistakes are not intentional. They are often due to lack of knowledge, lack of resources, or simply the sheer complexity of the system. Getting professional help is often the best solution. A good accountant or tax professional specializing in e-commerce can save sellers thousands of dollars. They can prevent costly mistakes. They can help navigate the rules. They can ensure compliance. This is an investment, but it is one that pays off. The typical Amazon seller might start selling in January. By October, they have sold $40,000 worth of goods. They realize they have nexus in 5 different states. They have not collected a single penny of sales tax. Now they owe all that uncollected sales tax out of their own pocket. Plus penalties and interest. This happens more often than one would think. It is a common heartbreaking scenario. $100 in sales tax owed can turn into $500 with penalties. $500 owed can turn into thousands. This snowball effect is terrifying. Inventory stored in Amazon FBA warehouses creates physical nexus. Imagine a seller in California. Their inventory is sent to FBA. Amazon then distributes it to warehouses in Texas, Florida, Pennsylvania, and Arizona. That seller now has physical nexus in 5 states. They might need sales tax permits in all 5. And this can happen without them even knowing. Amazon does not tell sellers exactly where their inventory is. You have to run special reports. You have to piece together the information. It is not straightforward. The record-keeping requirements are immense. For sales tax, you need to record every transaction, the buyer's location, the item sold, the sales tax collected. For income tax, you need to record all income and all expenses, bank statements, credit card statements, receipts. Everything needs to be organized. This level of detail is necessary for audits, and audits can happen years after the fact. So you need to keep records for many years. Usually 7 years is a safe bet, sometimes even longer depending on the state or federal agency. The overall tax system for online businesses feels designed to trip people up. it is not user-friendly. It is not intuitive. It requires a deep understanding of tax law, and tax laws are always changing. For a new small business, this is an impossible burden. They want to focus on their products, their marketing, their customers, not complex tax filings, but ignoring taxes is not an option. It has severe consequences. The cost of compliance is real. It is a significant hurdle for growth. It causes stress and anxiety for many entrepreneurs. Many small sellers operate under the federal tax ID of their social security number. As a sole proprietor, this is common, but as your business grows, you might need an EIN, an employer identification number. This is like a social security number for your business. It is needed if you hire employees or if you change your business structure. Applying for an EIN is free and easy, but it is another step in the tax compliance journey. Every step adds more complexity. The average Amazon seller generates about $10,000 to $25,000 in monthly sales. This means they are often well above many economic nexus thresholds. They are generating significant income, but they might not be saving enough for taxes or correctly allocating for sales tax. Many just spend their profits and then tax season hits. They suddenly realize they owe thousands. With no money set aside, this is a very common and heartbreaking mistake. Financial planning for taxes is just as important as product sourcing or marketing. But it is often overlooked until it is too late. The complexity of product categories also adds to the sales tax headache. Some items are fully taxable, some are partially taxable, some are exempt. For instance, groceries are often exempt from sales tax, but prepared food might be taxable, or clothing under a certain dollar amount might be exempt in some states during certain times. Think about back-to-school sales tax holidays. These temporary exemptions add yet another layer. You have to know when and where they apply, and you have to configure your systems to handle them. This is an ongoing battle for accurate collection. The government wants its share. States want their share, and they are getting better at finding it. Data analytics, cross-referencing databases. It is all becoming very sophisticated. The days of flying under the radar as an online seller are largely over. Every transaction leaves a digital footprint, and tax authorities are tracing those footprints. Ignorance of the law is not an excuse. This is a lesson many Amazon sellers learn the hard way. The cost of doing business online includes a significant tax compliance burden. It is a reality that needs to be understood from day one. Otherwise, the dream of online success can quickly turn into a financial nightmare.